So we have a very, very good trade this morning on the Russell 2000. We actually traded the Dow, but we also switched to have a look at this. This has done 22 points up. Now, what's quite interesting is these pullbacks compared to the other indexes. They're very, very small. They work out about 12% when you're looking at it. So I'm just going to show you this as an example to here. 2 secs. Right, there we go. Right. Reversal areas. Right, and then I want to show the 12.5% with price. Here we go. 2 seconds. Some of them have been watching it all day, is this. And I just thought I'd do a video about it. So 12.5%, you see how that pulls back? So literally there's no real reason to get out. And then obviously as you're coming back up to your next swing, literally pulls back to 12.5%. The other indexes were moving back about 23, which is a significant amount of money on your profits. Now, obviously, when we get to the high of day, which is here, it then does break the 12.5% and it comes down and starts this sideways action. About 3 hours worth of sideways action. This is just over an hour of price action. So we've watched this. What's interesting is this is pretty much straight up, very, very, very tight pullbacks. And then these is pretty much symmetrical. Now, what's interesting is it's very easy to see when you're going sideways on the Russell, but it is literally torture. It's like watching paint dry. So it's just something to note. If you want action, then the other indexes are better. But for perfect trades, and this is just a trade idea, when the Dow and the Nasdaq all trigger long, they all have massive pullbacks, but this one doesn't as much. Well, if the others trigger long and then you hop onto this one long, as an example, then you can pile in more contracts. Just a point to note. So this then went sideways. So what happened here is, I'll just get rid of this drawing because I just had this on just to explain. Comes along, pops down, builds this base of support, which is the 1792 mark, give or take. Pretty much the base of all the closes are practically at this level. Obviously, we've now broken out after 3 hours of painful torture of sideways action. For a trend trader, it's not very nice. So my point is this: basically, it comes up, it makes a higher, and it expands out here. Right, obviously that's technically a lower high at that point. So we're all thinking, hey, it's going to go down. But they're not going to make it that easy for you. And they don't make it that easy for you. So then we come down back to the base. We think, all right, hang on a minute. Maybe it's going to be, we're going to break out and go to the long, because potentially this area could be a balance point for higher. Or obviously it could be the top of the mountain. I come back down to here. Now, as it's playing out, it does look like it's coming down now. So, but there's a few valuable lessons here from a patient's point of view. Don't just jump in and try and short on the first swing down, because it's just genuinely 9 times out of 10 it's not going to work. And obviously you got to be looking at where your risk is. So my point is this: is basically when this comes up to here, you've got a little bit more information. And what I mean by that is let's take the retracement and look at what you're potentially risking. So you're risking that amount there. It's 50% up. So we're 50% up, and it's not enough. It's not enough for the risk, because obviously if you think about it from here, you need to risk a high of day. Well, that's 5 points. Obviously that's $270 on this, on 50 points a contract. So it's a significant chunk, right? The better option, and it's obviously trying to be more patient. And I'm just going to switch this so we can see. is look at this. Right, this is the reversal area that I'm talking about. So you really need to be up at the 23% mark on the fib. Then look at the difference, what you're risking. Now, this trade might not play out, for obviously it might not come up this high, but you're risking 70 as against 270. That's doable. This is not doable from a risk point of view, because we obviously have to think about all our trades from a risk point of view first, not from a, hey, I think it's going to go down. And I've been saying this all afternoon. I think this is going to go down. And obviously I've been giddy to get into the trade. So, you know, even as a season.
I didn't catch that. Could you try again?
Oh, hey up, sir, is thinking I'm doing something on other PC, so we'll shut that one down. So my point is you have to be patient. You have to be thinking, how do you handle this? You need it higher. That's the answer. If you're going to short, you need it higher. And obviously, if you're going to go long, you need to be at the base of where it's building for the next balance point up. The point there is, it's obviously, if you look at that from this place point, bear in mind you had a few opportunities. That's $300. It's a decent amount. As soon as you see this, you've got a baseline of strong support. Now, obviously, this has now been broken. Whether or not it comes back down, may come to VWAP, may come further down. We don't know. We can just watch price action and play price action. But I just thought that was a valuable lesson about being patient and where you potentially should be looking for from a point of view of a reversal. Now, obviously, I've said you can short from here. Obviously, that is high risk potential that it won't play out in a sense, but it's a low risk amount that you're risking, because if it goes up here, you get out. Now, the trade, and it goes to show the free oranges, the free blues works best when you're coming first time or second time out of the road. So obviously here we come here, that's your trade going up. You get your free bars there, and that's your monster trade, right? And obviously that would have netted you 1,000 off one mini contract on the Russell 2000. This is where you go in, right? Risking the other side of the road. That so far has netted you 165, right? With a risk on the other side of the road of 95. So it's not as obviously successful. Now, if you look here, and this is just a point to note, we know we're rounding. We don't just want to take every single trade. This is free bars, and it's not followed through, so we wouldn't take this. Free bars, this did follow through. But would we want to be taking this? Yes, we can, but it's a tight stop. So that would have stopped us out. Because obviously, potentially, this could have broken out and gone to the sky, and we all live happily ever after. But obviously, in this instance, it didn't. And it's worth noting just to say, yes, it is a trade that I would potentially take, but it's not got a high probability of playing out. This has got a high probability of playing out. This has got a high probability of playing out. We have the angle on the moving average line. It's a really good angle. This is flat. If you go in here, you're scalping. It's highly likely that it's not going to pop up. Anyway, it's only a short video, and I just thought it'd be worthwhile doing it from a point of view, just some general observations on the perfect trade and then the nightmare sideways action that we've had. This is just an update because we're just closing for the day. As you can see, just looking at the chart calculator now, this particular trade triggered and is now worth 5 points, which on what's this set as? I'll just let you know. Right, oh, that's 100. 100 micros, obviously on 10 micros, that'd be worth $255. So and this is ending the day.